Good to see you again, Michael.
Thanks for having me.
Well, thanks for having me. We're in your place here, and
I guess I am.
the host. So last time we did an interview was about a year ago. It's just over a year ago. We did October last year. We did two. Covered a lot of stuff. A lot of stuff's happened since. So I want to cover a lot of that with you, but I'm quite interested to find out, just from your perspective, what it's been like for you this last 12 months, because there's been a lot of changes for you personally.
It's been an educational 12 months. I think that the first stage of my interaction with Bitcoin was defensive. Like I was investing in Bitcoin to defend my treasury. And so first we had a problem, and the focus on the problem was the focus upon the currency war and the debasement of currency and the fact that treasury strategies weren't working. So with that kind of stress, we found Bitcoin. I think the next stage was opportunistic. It's like the stock was $120 a share, and we thought, well, if we buy back the stock at $140 a share, we'll be able to buy some Bitcoin, right? So that was the defensive, very careful rotation of our shareholder base. The second stage, which started about this time last year, opportunistic, our stock doubled. And then we realized, well, we can actually go and raise money and we could raise money. And then we thought, well, we're going to raise money. Maybe we could buy some Bitcoin with the money we're going to raise. What better use of proceeds is there? And I think the first convertible debt offering, right? We came to the market, we wanted to raise $400 million, and we got oversubscribed, and we raised $650 million. And that deal was like December. So we're at the end of November right now, right? So about a year ago in December, we raised $650 million at 75 basis points, and we bought Bitcoin with it. So that was opportunistic. And I think at that point, people still weren't sure what to think. I mean, first they thought we were taking an obscene risk, and then they thought, they weren't sure what to think. But by February, that deal we'd done in December was the best performing bond issue of the year in the world for anybody, right? So our stock had gone up by a factor of 10 almost, and that bond tripled. And by February, we thought, well, this is more than opportunistic, and this isn't defensive anymore. It's not opportunistic anymore. This is a strategy. This is strategic. And so if you look at our filings, when we filed our 10K, which is the first quarter, a company that's public has to state what's your business strategy, right? And our business was selling enterprise software at the beginning of 2020 with a bunch of money on the treasury. And by the beginning of 2021, our business was a MicroStrategy, let's sell enterprise software, and a macro strategy, we're going to acquire and hold Bitcoin. And we're going to do that with equity or debt or any other kind of rational financing. So I would say we went through these three stages. And of course, as you find us today, it's strategic, right? Our strategy is acquire and hold Bitcoin. The core MicroStrategy business is growing better. Like we were not growing when we started this endeavor, and now we're growing 5 to 10% a year. So I feel like it revitalized, infused a lot of vitality and a lot of energy into the core business. It certainly infused a lot of vitality into the brand. The MicroStrategy brand is much better known. The MicroStrategy, company is much better known. So it's good for the employees, good for the shareholders, good for the customers. If you sell enterprise software, then you're selling to CFOs and CEOs and CIOs and our competitor is Microsoft, SAP, Oracle, IBM, all much bigger, all much better known. And so your number one challenge is you walk into the place and knock on the door and they say, well, who are you? So a year ago, nobody really knew who MicroStrategy was, but today,
they know now.
A lot of people know who we are. In fact, like the CEO of Microsoft might go on CNBC and talk about Microsoft and get 15,000 views on Twitter And I would go on CNBC and get 400,000 views on, So it's kind of a very interesting thing. We leapfrog from being, the 100th smallest or 100th largest enterprise software company to all of a sudden being more well-known than all these software companies we competed against. So I thought it was a really good year for MicroStrategy. I thought it was a really good year for Bitcoin. If we look at Bitcoin, I would say the same is true. If you look at Black Thursday, right? People back in March, people were afraid. Is Bitcoin an inflation hedge? Is it a safe haven or is it a risk asset? And what's going to happen? And I would say by June, July, August of last year, it was like a defensive strategy. I have some money. I got to do something with it. And maybe I'll do this Bitcoin thing with it. And then I would say by the fourth quarter, it started being opportunistic, right? When Square announced they bought Bitcoin, when PayPal started moving Bitcoin, when people saw institutional adoption, they thought, well, maybe it's not just what would you call it? Like it's not just an idealistic strategy for a small segment of true believers. Maybe this is also a tech investment. Maybe this is a risk, a risk or big tech type idea with some momentum behind it. And I would say that starting when we hit Elon Musk Day, I think Tuesday in February, whenever they announced, we crossed the chasm to the mainstream adoption. And I think that the first year of mainstream adoption, you kind of look at it from March of 2020 to February of 2021. And the second year of mainstream adoption starts in February of 2021. And we just have this litany of positive shoes dropping. The election of Biden was good for Bitcoin. The new administration and all the regulators, including Gensler and the entire crew, even Janet Yellen and even Jerome Powell, good for Bitcoin. Right? And then Cynthia Lummis arriving in the Senate, good for Bitcoin. Turns out 6 other senators, good for Bitcoin. Then it turns out a congressional caucus, good for Bitcoin. Then this parade of activities, the approval of the ETF, the parade of public offerings of Bitcoin miners. By my count, there'll be 16, at least I can count off the top of my head, 16 public companies that are Bitcoin miners by the end of this year. And I'm guessing if I can count 16, there must be 20 or more. In August of last year, before we announced, I don't think you could find a single public company that held $5 million of Bitcoin on their balance sheet in August of 2020. And then all of a sudden, we'll end the year, and every Bitcoin miner, by definition, is holding some amount of Bitcoin. Many of them, like Marathon, buying Bitcoin in the open market. And I would say, if you look at MicroStrategy's journey from discovery to defensive to opportunistic to strategic, I feel like Bitcoin had the same journey of it was discovering itself, and then it was an opportunity, and now it's becoming a strategy. And the things that we did, we did a $650 million convertible offering, and then we did the $1 billion convert offering, but Marathon did a $650 million convertible debt offering at 1% interest a week ago. Riot just sold $600 million of equity between October 1st and November 15th. Okay, so you're starting to see flows of capital into Bitcoin, and you're starting to see a whole array, a cohort of publicly traded companies entering the space, and they are building a bridge between traditional investors and institutional investors and the 20th century economy and the crypto ecosystem of the 21st century economy and Bitcoin. So I would say all in all, good year.
But what has it been like for you personally? Because I remember when we spoke previously, you had to, talk about the idea to your board and explain to your company what you were doing, I'm imagining some people thought, what are you up to? And, you've been vindicated, but also your roles, the things you do now, you're spending a lot of time promoting Bitcoin, doing interviews like this on TV. How's your year personally been in? Because your roles changed a lot.
I would say it went from scary to frenetic to fun. Right? It's,
Because you've been vindicated.
March of last year is scary, and then it's, if you have to agree to buy back $250 million of stock in order to buy $250 million of Bitcoin, that's a pretty expensive insurance policy.
Uh-huh.
Like, I'm going to buy out all of my shareholders or all of my minority shareholders so that I can pursue this strategy. So that was challenging, right? And we didn't know what would happen, right? Just nobody would know because no company had ever done it before.
Yep.
So uncertain. Then stuff started moving at a fast pace, and still, lots of uncertainty between September and, if you go from September all the way through this September, what do you have, right? You have the entry of Square and PayPal, which is interesting. You have, Thanksgiving last year, which was a roller coaster. You have the end of the year run up, right? Bitcoin's 25,000 on Christmas Day, and then it's 30,000 by New Year's Day, and right. So you've got that, and then you've got Tesla's entry into the market, and then you've got the China crackdown and Tesla's rollover, and then, the energy crisis stuff, and and Bitcoin trades from what, 65,000 down to 29,000.
64 to 29.
29. Yeah. And then that was pleasant.
Did you feel any pressure at that point?
Just the external pressure. You have all the external people that are, gloating, thinking Bitcoin's going to zero. But we were constructed. I've lived through worse, right? I've lived through a 99% drawdown in my stock.
Okay.
So people, they're like, oh, you don't know what it's like in a bear market. I do.
Yeah.
Know what it's like to be in a bear market. If you've lived through a 99% drawdown and stayed in business, then you felt the pressure. This is nothing compared to that, right? So this is, our capital structure is such that we're mostly equity, and then the $1.7 billion of convertible debt was unsecured. So there's no margin loans, there's no mark to market, there's no collateral coverage. So it was primarily just Twitter trolling volatility. It's like there's always somebody on Twitter that wants to make fun of me for having, Bitcoin's 30,000 and I bought it at 36,000, and they want to make fun of me for buying it at the top. And I'm like they're making fun of me today for buying it at the top. So it's like, Saylor's always buying at the top. It's like, well, I'm going to be buying at the top forever because it could keep going up.
Going up forever.
I remember when Bitcoin hit the all-time high at 19,000, and I went and raised $1 billion to buy Bitcoin at the all-time high of 19,000.
Mm-hmm.
Right? And that makes you $2 billion in less than 12 months if you buy at the all-time high with 0% money. So, but yeah, I bought the top. So I think it's kind of a little bit colorful on Twitter, but it's useful to have lived the life.
But
I'm not 26, right? I'm 56. So
Yeah.
I've lived through stuff, right? This is not the first chapter of my life. I've seen a lot of stuff.
But this is like a whole new chapter for you, right?
That is true.
And
it is definitely a new chapter, and it is new twists and new turns. And
is it like a whole new lease of like a whole new thing just to bury yourself into? And because one of the things I was going to ask you about is there's a lot of times where you're doing interviews and I'm seeing some of your ideas, and sometimes you're approaching things that in a way people haven't thought about before. And I'm just kind of wondering, do you spend a lot of time just like deep in the weeds thinking about this, strategizing?
I think a lot.
Yeah.
Yeah, but I also just think I have the benefit of having 30 years in the software business, right? And I've launched a dozen different businesses, more than a dozen different businesses, maybe 2 dozen. So So I've gone through innumerable product cycles, dozens of product cycles. I've gone through all sorts of different business situations. So I have a lot to draw on. And then also I'm an engineer, but my engineering background is aerospace engineering. So if you were to say to me, Mike, what's the best engineering discipline? I would say you want to be an aerospace engineer because they're truly systems engineers. If you want to make an airplane fly, you have to master all the disciplines of mechanical engineering, and you have to master all sorts of physics, and you have to know elements of civil engineering and elements of ocean engineering and elements of avionics and electrical engineering. There's computer science. Mm-hmm. Every discipline of engineering pops up if you want to make something fly through the air. So in systems engineering, you learn all about adaptive control systems. Like every airplane is designed to be stable, which means that if the plane tips, right, lift builds up on the wing that's lower, and lift falls on the wing that's higher, and so the airplane comes back to stable. That's a first order feedback loop, right? That's a servo. Well, in Bitcoin, that's a difficulty adjustment.
Okay,
so people in Bitcoin are like, oh, the difficulty adjustment, this is the best thing ever. This is genius. Well, not really. I mean, Satoshi was a systems engineer. You can look, if you read Satoshi's papers and you think about how Bitcoin was engineered, it was built by someone that knew engineering very well, because it's an adaptive control system, and they had a target, and they had a first order feedback loop, and the difficulty adjustment is just a first order feedback mechanism. And how long have those been in existence? Every machine ever constructed properly, like every mechanism had a first order feedback loop in it. Early steam engines, the automobiles, thermostats, all the control systems, ballistic missile systems, every electrical engineering system. So I think I'm lucky enough just to be able to draw upon basic systems engineering background and a decent practical education. At MIT, you learn thermodynamics, you learn fluid dynamics. If I was to describe the motion of water in a swimming pool, if you drop a rock in it, you can't describe that with arithmetic. Mm-hmm. If I want to describe the motion of air around a body like this, or around any fuselage, you can't describe it with arithmetic, which means you can't describe an economy with one number called velocity of money and another number called inflation. And it is obvious on inspection in the first 100 milliseconds that you cannot describe a bathtub with inflation. You can't describe an airfoil with inflation. You can't design a ship or a plane or a car. You can't model an engine. You can't describe the way that heat builds up, on a Bitcoin mining rig with arithmetic. Mm-hmm. Nobody does. You can't build, an HVAC system. You can't even cool a house. A most basic workman building a house and wiring your bathroom with heating and cooling wouldn't use arithmetic, right? And they would know that you need to think more sophisticated. And the math that you would use in describing fluid dynamics or aerodynamics or thermodynamics is vector calculus. Or vector calculus is of differential equations and the like, right? Calculus of variations. And, you're a freshman 18-year-old in a decent school, and they're like, dolt, no, you can't solve the problem with arithmetic. Like, what is the significance of Isaac Newton? Well, Isaac Newton gave us engineering grade math, right? Before Isaac Newton, we didn't have calculus of variations. Why does that matter? If you build a bridge and you don't want the bridge to collapse, it matters. If you build an airplane, you don't want it to fall out of the sky, it matters. And if you want to build an electric motor or an internal combustion engine, it matters, right? So Isaac Newton gave us this more sophisticated math, and Andrew Carnegie gave us steel. What is that? It's an engineering grade metal. Does it matter? If you want to build a skyscraper 100 stories high, it matters. What does Satoshi give us? Engineering grade money, right? Engineering grade property. Okay, well, what's the significance? It's just properly engineered. With arithmetic? No. Like, not with arithmetic, right? All these things that we think of as modern innovations, airplanes, cars, railroads, radio, it just had advanced engineering materials in it, or advanced engineering math in it. And so if you have that background, if you're an engineer, that's helpful. If you have a background in history of science, that's helpful. And so one of my degrees at MIT, Peter, was aeronautical engineering and spaceship design. But the other degree was history of science.
Okay.
So starting at age 18, I was studying, radiation, like history of cancer cures, what happens when you introduce a railroad into a culture, what happens to the horse and buggy, when the railroad comes along, impact of steel, impact of manufacturing, impact of oil, impact of Maxwell's equations. And so I think that's useful, and I was always very fascinated by that. And I wrote the book, The Mobile Wave, in 2012, which is really a history of science, but applied to where I look back a few thousand years, and we look at all sorts of interesting things, like why did the English language and the Roman alphabet rise to dominance over the Chinese alphabet and pictographic languages? And why did the United States take control of the computer science era versus the Chinese and the Japanese? Why did we dominate digital, and why were they dominant in analog? And those are all things on my mind.
Mm-hmm.
Right? What's the impact of software when it goes from a solid state to a liquid state to a vapor state? So thinking about that, I mean, what's solid state software? Yeah, you're like,
Yeah.
I see you're asking, what is that?
Yeah.
That's when you run your software on a mainframe in the back office. That was like the first generation. What's liquid state software? That's when you can put it on a laptop, and carry it around with you. You brought it to your meeting.
Right.
What's vapor state? Vapor state is when it's running on your watch or on your phone and it's in your pocket. What's the difference? Well, you're sleeping with the phone. You're not sleeping with the mainframe. Therefore, a piece of software can ring you and wake you up in the morning when you're sleeping with it, but mainframe software couldn't. Therefore, when software went to vapor state, you morphed into things that were magical, like communications techniques. Now you can have, a camera on your phone, or a camera in your pocket that's software camera, and you can have magic maps in your hand, and your phone can talk to you, and you can talk to other people, and right. The world changes when you start thinking about that. So, what happens when you start thinking about the digital transformation of things that weren't digitally transformed during the first mobile wave, right? The mobile wave was digital transformation of photos and music and relationships and communications and maps and books and movies and storefronts, right? And so that gives you Google, Apple, Amazon, Facebook.
Mm-hmm.
If you figure that out in the year 2010, conclusion is buy Google, Apple, Amazon, Facebook. Why? Because of the digital transformation of the 20th century, 20th century photos and entertainment and storefronts and communications. And they're just going to be better, and they're going to move at the speed of light, and you're going to be able to ship a product to 1 billion people on the weekend for a nickel. And if Apple can ship a product, a better camera, to 1 billion people on the weekend for a nickel, Apple's probably going to make a lot of money.
Mm-hmm.
And if Google can upgrade maps so that they're magical, so the map talks to you and tells you how to drive your car and tells you don't go to that restaurant, Google's probably going to make a lot of money. And what you conclude is digital maps are worth a lot more than analog maps. Rand McNally was never worth more than $50, $100 million. Look, I got a library of books here, what happens if I snap my fingers and I dematerialize the entire library and I print 1 billion copies of it and I send it to everywhere on Earth, and then the library speaks to you? And what are the prospects for the company that owns that library? They're good, really good.
Mm-hmm.
So I was thinking with the mobile wave that if you can digitally transform all that stuff, you're going to create trillion-dollar companies. So that's what I did. So you find me in 2020, and I bought Facebook stock, I bought Apple stock, I bought Amazon stock, I bought Google stock, right? I rode that wave. What's the trick? You buy the dominant digital network while everybody tells you you're stupid. You hold it and you wait. And then now, how many people are going to tell you you're stupid that Google, Amazon, Facebook, and Apple will never work? Nobody, right?
Yeah, of course.
18-year-old, 6-year-olds are going to tell you that obviously Amazon, Facebook, Google, and Apple work. But if you went back to 2010, you know what people would have said? The smartest hedge fund guys on Wall Street, they would have said, if Apple stock doubles, we're going to sell your Apple stock and diversify your portfolio because we're going to do good risk management because it's too risky to hold Apple if it doubles. So what are you going to do? We're going to buy other computer companies. They used to say that to me, and I said, well, guys, the problem with your strategy is that if Apple is able to dematerialize all these other computers, then Apple's going to eat every other computer company and you won't need any of the other companies. And so you're going to be selling the winner to buy the losers. And every time you diversify, you're basically converting the winner into the loser. We got to a point, Peter, where Apple made 150% of all the profit in the mobile phone business, which means that collectively every competitor lost half as much as Apple made so that they could compete against them. And so you see the fallacy of selling, of diversification. And the same has happened in retail. Amazon won, Walmart kind of kept up, and the next 2,500 retailers lost. Mm-hmm. And if you had sold Amazon to diversify, right, the world's richest man is, or Jeff Bezos is rich because he didn't sell. So we saw that play out, and now let's talk about Bitcoin, right? What is Bitcoin? Well, Bitcoin is digital transformation of gold, maybe. Maybe Bitcoin is digital transformation of property, more interesting. Bitcoin is digital transformation of money, very politically charged, ideologically charged term. People fight over what money is. And Bitcoin is digital transformation of energy. No one's got their head around that yet. But all these things are things that Google, Apple, Amazon, and Facebook did not figure out how to digitally transform. And they're so profound that people staring at them, right? The traditional Wall Streeters are like the Kodaks staring at digital photos, and they still haven't quite got their head around the implications, right? And ultimately, you want to make a lot of money on digital photos, you'll probably do it via Facebook or Instagram, more likely even than you'll do it by creating a digital camera. So I just think we're the next decade, it's just the continuation of the digital transformation of everything in the 20th century. Mark Andreessen had this phrase, software is eating the world. Right? Smart people have said Bitcoin is just software eating money. But I think the problem with the phrase software is eating money is it makes it so politically, ideologically charged and controversial or confrontational that people's brain kind of cuts off and they either decide they're against or they're for, and you don't really get any further. So I think it's a lot more constructive to think of it in terms of digital transformation of property or digital transformation of energy, because those are less politically charged terms. They're not so ideological, they're more technical. It's just a technology.
And you're fighting different battles.
Yeah, it's very different.
Yeah.
Different battle. It's like Peter, you have $100,000, you want to save it for the rest of your life. What are your choices? I can buy $100,000 worth of gold. Gold's been going up 0% a year for the past 10 years. It doesn't seem to be. And can I rent my gold? No.
Nope.
Can't rent my gold. Can I mortgage? Can I put a mortgage on gold? Not easy to get a mortgage on gold. The United States government's not loaning you money against gold. But can I put a lien on gold? What does that even mean? Why would you ever put a lien on gold? Can I build an application with gold? yeah, you can build jewelry with it, but by the time you build jewelry and sell the jewelry, you'll probably make less money than if you just held the gold, because there's so much expense to fabricating the jewelry and marketing the jewelry and distributing the jewelry. So gold is a tricky thing. 100,000 of gold, I'm not sure of. So better idea, I buy a second vacation, a rental property, $100,000 condo, and then I Airbnb it. A lot of people love that idea.
It's not the worst idea.
Yeah, not a bad idea. It got to be a better idea with Airbnb. It used to be a rental. I had a guy that worked for me. He used to be a house manager. He quits because he's got like 4 rental properties and he's operating them. And I'm like, okay, well, you're an entrepreneur. Congratulations to you, but I guess my loss. But his retirement plan was, I'm going to buy property, I'm going to fix it up, I'm going to rent it. See, a lot of people do that. I buy it, I buy a condo or I buy an apartment in a college town, I fix it up and I rent it to the college students and it gives me an income for life. It's not a bad idea. It's a 20th century idea. And Airbnb is a 21st century twist on the idea to get a higher, more of a higher utilization on it, maybe a higher yield on it. So that's the second idea. The third idea is I can just buy $100,000 worth of the S&P index or big tech. S&P's up 14% a year for a decade. Big tech's up 19% a year for a decade. Nice thing about it is it's lower headache than owning the property. On the other hand, you don't really have property rights if you own a security. The problem with securities versus property, and it's a more deep philosophical issue, but if I own a building, I have the option as the property owner to mortgage it, to sell it, to put a lien on it, and to rent it. When I say put a lien on it, I mean like maybe you sell the air rights above your parking lot for $20 million in New York City and you keep the parking lot. If I own the parking lot and you own a share in my REIT and you have 1/1000th and you're a limited partner, you don't have the right to force me to sell the air rights. You can't force me to sell it, right? So you don't really have any governance. You can't sell it. You can't put a lien on it. You can't take a mortgage against that because you're not the property owner. You're the security owner. So when you own securities, you're a limited partner with limited rights and you have impaired rights. Property rights are better. Now, if you're a rich person, you can buy a building. But buying a building, if you're a middle-class person, I guess, and if you're willing to work on the weekends, you can buy an apartment and you fix it up yourself, but it's a lot of work, right? So securities were created to give people the ability to own something, to own an asset that was low maintenance, but you suffer from dilution of the securities because your property rights are impaired, or the general partner might issue more securities, and you have no control over that, right? So why is Bitcoin special? Because Bitcoin allows you to buy $387 worth of property. You can't buy 1/1000th of a building, but you can buy 1/1000th of a Bitcoin. And so this idea that I want to save money for 30 years and I want something better than gold, right? Property is better than gold because property you can rent. And you can mortgage and you can lien. And I want better than a security. Property is illiquid, but high quality. A security is liquid, but lower quality. Gold is this kind of, dumpy dead metal thing, which is like maybe got all the liabilities of both. But it was the best idea we had going, a bearer asset, right? A bearer monetary asset. And so I guess it's got that going for it. I could carry a bar of gold around if I could somehow get through an airport with a bar of gold. Hypothetically, theoretically, it's a bearer asset. Practically speaking, it's only a bearer asset as long as you don't have that much of it. And when you have a lot of it, it ceases to become a bearer asset anymore, and it becomes kind of a pile of rocks. So that's why I think Bitcoin is special, or digital property in general is special. If we come back to this digital transformation, I think the thing that most people miss is that they keep getting trapped in this debate over it's a currency and the government's going to shut down the currency, and it's opposite to the US dollar, and it becomes a political, patriotic, debate. And I don't think that's very constructive. And also, it's not a very helpful model or metaphor to think about it. It'd be much better if you said, Rand McNally sold this 500-page atlas, and that's here. That's a analog map. And Google sold digital map. And when Google took that analog map and scanned it, they took the weight out of it, and then they realized they could just go ahead and scan all the satellite images, and pretty soon, instead of 500 pages of maps, you had 500 million pages of maps. And then they took the weight around, and then and pretty soon, instead of 1 million copies of the map of the atlas, you had 1 billion copies. So you had 100 million pages and 1 billion copies, and it doesn't take a rocket scientist to figure out that that's a lot more map. And then the next thing is they gave you the ability to expand and contract it. And if your eyes aren't that good, is pretty obviously a benefit to be able to zoom in and zoom out. So that got better. And then the next thing, they started telemetering their Android phones, and they put the traffic on the map, and you can see how fast the traffic is moving on the road. And that's a trick you could never do with an analog map. Mm-hmm. And then they made the phone start talking to you, and pretty soon the phone can tell you which way to drive. And then they marked all the restaurants, and then they told you whether the restaurant was open, and they told you, they gave you the photos. Pretty soon you can get the menu and the photos of the food and the reviews and the traffic, and you could see where we're headed here, which is eventually the car. You get in the car and you say, take me to a cool place that's open now that I'm going to enjoy, and the car does the rest of the work for you. And that was a possibility of a digital map, but an analog map was never going to get there. And what you ended up with was a smarter, faster, stronger map. And when you went from analog to digital, you went from something worth a few $100 million to something worth a few $100 billion, right? And there's no politics in this. Right? This is not ideology, right? This is just technology. That's the old way. This is the new way. If I take digital gold versus analog gold, it's the same thing. It's like, okay, that's $1 million worth of gold. That's $1 million worth of digital gold. That has weight, that has no weight. That you can't subdivide, that you can subdivide. You ever try to recombine gold? It's like you got to put it into a forge and a fire, and it's hot and it's dirty and it's dangerous. This is clean and quick and easy and free. That's money that moves at the speed of light, that you can program 1 million times a second, that you can give to 8 billion people and fetch back. That is just gold. If that is worth $5 trillion or $10 trillion, and you can debate whether it's 5 or 10, let's say it's $5 trillion is the monetary premium on gold. I kind of rather think that it might be $8 trillion is the monetary premium on gold. It's trillion. If that's that, and this moves at the speed of light, smarter, faster, stronger, it's already, 10x better. Like Google Maps is more than 10x better than Rand McNally Maps. Apple Music is more than 10x better than the DVD or the CD or the vinyl record or the whatever. There's just one last point that I think is really important, which is Einstein said matter is energy and energy is matter. What is property? Property is economic matter. What is money? Money is economic energy. Can you convert money into property? Sure you can. Can you convert property into money? Sure you can. In the 20th century, it takes 6 months to sell a building. There's a 6% commission. It becomes money. The money loses 1% of its value a month. Okay, that's the system. 21st century Bitcoin, you can convert the property into money in a few minutes. The commission is 0.1%. It's liquid. You can move it anywhere in the world, and it doesn't lose its energy, right? It still lasts forever. So is Bitcoin digital money? Yeah. Is it digital property? Yeah. Is it digital energy? Yeah. People are like, well, how can it be digital energy? Well, how can that be digital music? But does digital music exist, right? I have a piano. You sit down, you play the piano. I record. I put it in a little file. I send it. They're like, well, but it's not the piano. I know. I send it to around the earth. And if you have a speaker and you have a power source and you have a decoder, the music comes out the other end, right? Like, well, it's not perfectly the same as the piano. Well, if you actually put a Steinway stereo piano on this end and a Steinway stereo piano on that end, and the file moves between them, then it really is exactly the same. We pretty much decode it back the way it was. What's going on here? Symphony orchestra plays Beethoven's Ninth Symphony, right? The old way was you have to hire 100 musicians that have spent 30 years of their life or 15 years of their life mastering the skill, and you can listen to Beethoven's Ninth. The next way is I put it on a vinyl record and it doesn't sound quite as good. The next way is I make it digital and I run it out of speakers and it sounds better. And then eventually I run it out of super high quality speakers and I give it to 8 billion people and they run it 1 million times a year and it's free and it's digital music and it's pretty damn good. And can you make money? Yeah, a lot of money. A lot of money through the digital transformation of music. And so what I see here is with digital energy, it's like the same exact thing. I have a megawatt of power. If I sell the megawatt of power at 12 cents a kilowatt hour, it's about $1 million. If I hold the energy as a megawatt of electricity, I put it in a battery, I lose 2% of the power every month. I lose 24% of the power a year, a 24% inflation rate on a battery. If I send it down an electricity line, 6% transaction cost. Move the electricity 10 times, lose 60% of the money. Hold it for, hold it for 3 years, cut the amount in half. Half-life of electricity in a battery is 3 years if you had the perfect battery. It's pretty obvious that's analog energy. Mm-hmm. That's electromagnetic energy. That's a way to store it. I guess I could store it as metallic energy, convert it to steel, or convert it to aluminum, energy in metallic form. Or I could store it in digital form, convert it to Bitcoin. You run a megawatt of power through a SHA-256 S19 miner, you'll end up with about $5 or $6 million. $5.5 million worth of Bitcoin right now. Once you've generated the Bitcoin, and your cost is the capital cost of the SHA-256 miner and the engineering to run the center and the like. So you got a cost there, but now you've got digital energy. Now your inflation rate 0. Now you can hold it for 1,000 years. You can move it. You can send it 1,000 times. Transaction fee is next to nothing. It's effectively nothing on the Lightning Network, and you know what it is on the Bitcoin network. And you're like, well, but how's it digital energy? How do you get it back to be energy? And the answer is, okay, I send $1 billion block of it to Tokyo. I run it through an exchange. Heat exchanger? Decoder? No, I run it through a Bitcoin exchange, and I convert it back into yen, and I take the yen and I buy electricity from the Tokyo Power Company. And when do I do that? Whenever I want to do that, right? You're like, well, what if there is no electricity? Well, yeah, I guess if the world comes to an end and there is no Tokyo Power Company, then I guess we can't call it digital energy for Tokyo. But that's like, what if there's no speakers and I give you a music file? If I obliterate all of the speakers and all the computers in the world, then your digital music isn't really digital music either. And if I obliterate all the iPads, your digital book isn't really a digital book. And I suppose if I obliterate the human race, then all this digital stuff doesn't matter. But as long as there's a civilization that can produce electrical energy, I can exchange the digital energy for fiat energy. What's fiat? Currency is political energy. You can think of it as that, political energy. Mm-hmm. Japanese political energy, Russian ruble political energy, Turkish political energy, dollar political energy, Chinese political energy. So what do? I swap the digital energy for political energy. I swap the political energy, i.e. currency, current, for electromagnetic energy. You can have steel, mineral energy, or metallic energy. You want mineral energy, you buy a block of granite, right? Granite is mineral energy. You want liquid energy, buy a bunch of oil, right? Maybe you don't want energy, maybe you want matter. So I send $1 billion to Tokyo, I buy a building. Maybe you want to do some work with it. I send $1 billion to Tokyo and I hire 10,000 people to play Sgt. Pepper's Lonely Hearts Club Band or Beethoven's Ninth or whatever, or just do stuff, build me stuff, right? What you have is you have the exchange of energy for matter and matter for energy. And what's clear is the civilization is built on top of energy systems, right? And John D. Rockefeller, what did he do that made him the richest man in the world? He came up with a way to distill crude oil into Standard Oil. They called the company Standard Oil. People don't think about the word Standard Oil. Standard Oil meant he had one uniform quality of liquid energy that worked, that didn't gum up your engine, that wouldn't blow up in your face. It was a pretty big deal. If you can standardize oil, you create standardized energy. He basically developed and refined and distributed liquid energy to the world. And it was powerful enough to allow the United States to win both world wars. I mean, it tilted the course of Western civilization because Rockefeller provided liquid energy to the West, and we used that energy to defeat, the Axis. And you can trace the wins in World War I and World War II and many other struggles to the superior energy system.
So is that happening with Bitcoin? Are we twisting civilization again?
I think it is. I think that if you look at civilization and you say, what do we build the 20th century civilization? It's like a layer of liquid energy followed by what? A layer of metallic energy. Carnegie gave us steel. Mm-hmm. Steel is the apex metallic energy. Ask any civil engineer, what's the best material to build anything with? The answer is steel. Mm-hmm. Ask any aerospace engineer, what's the best material to build anything with? The answer is aluminum. Mm-hmm. Andrew Mellon became a very wealthy person, a patron of the arts, because of the Aluminum Company of America. Aluminum, steel, oil, these are all just forms of energy, right? One is a metallic form of energy. The other is electromagnetic form of energy. Tesla gave us electricity, right? The other one's a liquid form of energy. You could even argue water, liquid organic energy. Every city on Earth, where was it built? Base of a river. No river, no city, right? The water of life.
Well, it's energy for us.
Yes, like human civilization is all about harnessing energy, and the obvious networks are a river, a port, a seaport, mm-hmm. an airport, a railroad, right? Techniques like electricity, oil, steel, aluminum, and radio networks, right? Communications networks and the like, eventually giving way to the digital information network, which we call the internet. And now we have Bitcoin. And what is Bitcoin? Bitcoin is digital energy. And what makes it energy as opposed to property? Well, if I create $1 billion digital hotel and I can move it at the speed of light, it's digital property. It's indestructible. But the thing that makes it energy is the fact that I can rent the hotel out by the room minute. Right? I can decompose the hotel into 1 million pieces, send it to the four corners of the earth, morph it, and then reconstruct it again with no friction and no entropic loss, right? And so I know that a digital hotel is better than a bricks and mortar hotel. Steel and glass is better than bricks and mortar, and digital is better than steel and glass. But a digital hotel where I can move it at the speed of light and I can rent it out by the room minute starts to feel not like a matter at all. It feels like energy converting into matter.
You explain this one to me. Digital hotel, how is that? How am I using it? Like digital money makes sense over physical money.
Okay, let's backtrack here.
Yeah.
The Fontainebleau is behind you. The Fontainebleau's got 1,000 rooms in it, let's say. Room night in Miami Beach, $400, $500 a night. Mm-hmm. Pick a number. they can expect 70% occupancy rate. Okay, you bought the property, you got the occupancy rate, you got a lot of fixed cost. Okay, what do you do with the other 30% of the rooms that are empty? Nothing. Nothing.
Mhm.
You're going to run to 70% occupancy effectively at $500 a room night. So what if I make it digital? Well, my first advantage is I don't have to repaint it, right? I mean, the maintenance costs deteriorate. It's not going to sink into the sand. You're not going to have a hurricane hit it, right? It's digital. It's evanescent. So the maintenance cost on digital property is much lower than physical property. But now it's still 1,000 rooms. Okay, I want to rent out the rooms, right? What's the equivalent of renting out a room? Well, I mean, it's like if I loan you, if I have $1 million and I loan it to you, that's like renting the room to you, right?
Hold on. Are we in the metaverse here?
No.
Like, how am I staying in a digital
We're
hotel?
not in the metaverse. Like, this is real. This is only metaverse if I do this in Second Life or Fortnite.
How do I stay in a digital hotel?
Oh, you're not staying in a digital hotel. It's a metaphor.
Yeah.
You've got $1 billion and you can buy a hotel with 1,000 rooms,
Mm-hmm.
and that's a hotel, or you can buy $1 billion of Bitcoin.
Yeah.
Okay. If you have a hotel with 1,000 rooms, if it was a magic hotel, if it was hypothetically digital, the thing I'd be able to do with it that you can't do with a physical hotel is I would be able to take the 300 rooms that are empty and send them to Tokyo and Paris and London, where I can rent them. So you see, if the hotel could be decomposed and moved at the speed of light, I would go from 70% occupancy to 100% occupancy. And just bear with me, I'll explain how it gets to Bitcoin in a second. So the other thing that you would realize is if it was let's call it a magic hotel to make it easier. If it's a magic hotel, I could send the extra rooms anywhere on Earth where there was demand for the rooms with the blink of an eye. And if you thought about it, you'd realize that half of the time the room is not occupied even when someone's renting it. If you're you're not in your hotel. You probably have a hotel room here in Miami, but you're not in it. So if the hotel proprietor could actually rent that room out by the hour instead of by the day, then they could double the occupancy of it because most hotels aren't occupied more than 12 hours a day. You can't do it in the real world because you have real world constraints. It's too complicated. It takes too long to clean the room up, et cetera. But imagine if you had computer programs that moved instantly, they could just turn the room over and they could not just rent out 1,000 room nights, they could rent out 2,000 room nights because they would do it twice a day. Now you're up from 70% occupancy to 200% occupancy. But then you start to do an optimization and you say, well, why would I just constrain the hotel to Miami Beach? Why don't I move the hotel to Tokyo where the room rates double if I can sell them out? So now you get from 200% occupancy to 400% occupancy. And you start to think a little bit faster and you're like, well, why am I renting out the room by the hour? Why don't I rent out the room by the minute? Right? And so instead of 1,000 room nights or 24,000 room hours, now I'm 60 times 24,000 room minutes. And then you start thinking, well, people only pay a certain amount of money for a room, but if it was a double suite, they pay more. But if it was a conference room, they might pay more. So what if I could just morph the real estate into the highest value use real estate by the minute? And what you see is I'm getting a higher rent on the digital property because I can change it or reconfigure it every minute to the highest best use, and I can move it to wherever in the world there's demand for it. Now, what I just described is DeFi, decentralized finance. Let's apply it to Bitcoin. Instead of $1 billion hotel, it's $1 billion of Bitcoin. And instead of renting the room to sleep in, I'm borrowing the asset because I need the financial asset, maybe to short it, maybe as collateral, maybe to do something with it. But I'm renting it nonetheless. So I'm paying a fee, 4%, 5%, 10%, something. But I only need it for a certain amount of time. So when your property becomes digital, your maintenance costs collapse, but your yield explodes. Your yield triples, right? if you have that hotel in Austin, Texas, or let's say even worse, you have a hotel in New Zealand, and New Zealand locks down, and now no tourists are going to New Zealand, and your occupancy rate goes from 70% to like 15%, and you're stuck. The problem in the real world is fixed cost and fixed assets, right? Your staff is fixed, and the asset is fixed. And the beauty in the digital world is you have no fixed assets and you have no fixed cost. And so on one side, your risk collapses. On the other side, though, your yield, your rental opportunity explodes. So if you ask the question, what's more valuable, physical property or digital property? The obvious answer is digital property, because you can sell it to anybody on earth. You can rent it to anybody on earth. You can rent it at any frequency, at any time scale, and in any form. And you can do it faster. And you can, in a hotel, you have to hire human beings to work in the hotel, right?
Yep.
Now, what if I hypothetically created a robot that moved 1,000,000 times faster than a human being that worked for free on a fusion reaction? You could put that in the hotel. Would your hotel not be easier to run and more valuable? You're running the hotel, your costs go to zero, right? If all your labor is infinitely productive and free, your costs go to zero. You can't do it in the real world because you have to use real people and real mass. But in what you'll call the metaverse, right? In your cyber world, all your work can be done by software. It doesn't need to be done by people. So when you digitally transform something from the analog version to the digital version, you can upgrade it with software. And we see this, for example, digital maps, right? It's not people doing the work for Google. It's software doing the work for Google. Mm-hmm. Digital music. It's not people playing the music. It's software playing the music. I can upgrade the music.
There's still a people input and a maintenance.
The people put the stuff in, but you scale it up with software. You don't scale it up with people. You scale it up with software running on computer chips, and both of them are getting faster and faster. And the marginal cost is the cost of the electricity. It's not the cost of the energy. For example, look at the library around you, right? If you want to give this library to 1 billion people, you have to manufacture a lot of books and chop down a lot of trees. If Google wants to give this library to 1 billion people, it costs them marginally nothing. I mean, a billion times less, at least 1 million times less, right? Because it's digital library, not a physical library. So I think my point here is digital property is pretty obviously more valuable than physical property because you can develop digital property with computer chips and software. And you can develop physical property with bulldozers and steel and glass and people.
But is the point you're getting at is that all investment now in physical property is an opportunity cost of buying Bitcoin?
Yeah. I would say that...
we're still going to need someone to do that, though. We're going to need some hotels.
Yeah, but maybe now we're getting back to the theoretical issue, which is we're going to demonetize all the physical property in the same way we're going to demonetize the gold. You still need gold to wear. I have a gold ring on. You still need property to live in, but the value of the property should collapse to the utility value and not carry the monetary premium. And what you see in this world is that we have monetized metals, and we've monetized commodities, and we've monetized securities, and we have monetized property, especially, right, the definition of investment property. Right, by definition, how many people buy a second home because they need it? Nobody.
Very few.
What I mean to say is, let me state it more precisely. How many people buy an investment property to rent out to someone else because they needed to do that?
I mean, plenty do it because they want the extra income, they want the retirement income, they see it as an investment.
Yeah, so they do it they're monetizing, or they're converting their fiat currency. I give you $100,000, you put it in the bank, you know you're not going to get any yield.
They want yield.
So you have to invest.
Yeah.
So their choice was buy stocks, become a limited partner in someone else's company, or buy a small property where they're they're general partner in their own company, or go into some kind of mixed partnership with 2 or 3 other people, right, where they're a partial partner, or go buy something like gold that they think will hold value. These are all being monetized. And as Bitcoin grows, Bitcoin is the ideal money. So if I decide I'm going to sell my second or third investment property and buy Bitcoin with it, presumably the demand for investment properties and the demand for gold, both of those should decrease, right? So as the demand for those decreases, the price will come down. And so that means that if you wish to buy a first home, it will be cheaper for you. Right? The price of the property for its utility value will become less. It'll approach the utility value. And on the other hand, it's a lot better idea for a person to buy a Bitcoin and collect yield forever without dealing with the issue of, the renter trashed the property and defaulted on the rent and didn't pay you, and then a tsunami hit it and the roof collapsed.
So is this why you keep buying Bitcoin? Buying it for, was it you said to Joe Squawk, we stack forever? There's another 7,000 announced today.
The reason we buy Bitcoin is because it's our strategy, right? Right. We have a financial strategy, which is to acquire and hold Bitcoin. We're a public company. We've disclosed it to our public investors. Right? The real key in the marketplace is you should have a strategy, be transparent about it, and do it and pursue it with integrity. LVMH has a strategy to acquire luxury brands, and if they buy Hermes tomorrow, no one's going to bat an eyelash. But if Bernard Arnault went and he got into a totally different business, if he were to buy Square Cash or Twitter, people would look askance and think you're getting outside of your lane and this is not your expertise. So I think the key with a public company is you need to keep faith with your investors, right? Right? They bought my stock expecting me to do this, right? They didn't buy my stock expecting me to trade, other dog coins.
Well, they did now, maybe not 18 months ago.
Well, we've been very transparent, actually.
Yeah.
I mean, you could write a book on this, but the whole point is before we bought a single Bitcoin, we put out a press release saying we're considering buying Bitcoin.
Yeah.
And when we bought the Bitcoin, we put another press release saying we'll also buy you out if you don't like the strategy, and you have 20 days to tender your shares at a premium if you don't want to be invested in a company that owns Bitcoin. Right? So we've been very very progressive and transparent about what we did. Now, I guess the deeper question is, why did we adopt that strategy?
Well, I think I know.
I kind of answered that. First, we adopted it defensively, then we adopted it opportunistically, and then we adopted it strategically because we've come to the conclusion that Bitcoin is the apex property of the human race and it's digital energy. And, if you said, what's the best investment idea 150 years ago, I would have said, how about liquid energy? Liquid energy that, allows you to power the world and power a ship. You ever try rowing a boat across the ocean? Then try sailing a boat across the ocean. And then imagine Rockefeller shows up and says, well, I have this, drum of diesel, and you can just put it in and the thing will go 3 times as fast. And you don't need sails anymore, and you don't have to worry about the wind, and you probably won't die. It's like it wouldn't have been a hard sell, right? Like it's pretty miraculous what Standard Oil did. So,
but I think it's like what you were telling me earlier when you started talking about back in 2000 and whatever, buying Amazon, Google, Facebook. That's what you're doing. This is what you're doing with Bitcoin. You're at that point.
Something bigger than that. I mean, because Amazon, Google, and Facebook are securities. They're securities, and they're quasi-digital monopolies, but they're companies that operate a dominant digital network. And Bitcoin is bigger than that because it's not a security; it's property. That makes it somewhere between 10 and 100 times bigger because it's property, common property, not a security. and it's a protocol. It's not a company, and it's it's a deflationary asset. Those are all inflationary securities, right? There's more Amazon stock today than there was 5 years ago. So it's a similar strategy, right? Bitcoin is like owning digital gold on a big tech network, but it's better than any of the big tech companies, and it's better than gold, right? And so in that way, it's more powerful. And what I did personally as a personal investor was I invested and took big positions in Apple and Amazon and the big tech networks, but it was a personal portfolio investment. But I would say what we're doing here is a business. It's an intent business strategy to commercialize digital energy.
So you're in the energy business now.
Yeah.
Yeah.
Like, come back to Rockefeller. Like, how did Rockefeller build Standard Oil? Well, they commercialized liquid energy. What does that mean? He basically raised as much money as he could, and he bought everything. He bought everything, right? Like, he bought everything, cleaned up everything, standardized everything, right? He was bullish consistently 40 years running, so bullish on that industry that his great-great-grandchildren were still owning shares of those companies 100 years after he's dead, 80 years after he's dead, right? So it wasn't like just an investment strategy. It was something a bit deeper, right? It's a business development.
Did you know you were doing this at the start, or is this something you've recognized?
No, as I said, it was like we started defensive, then it became opportunistic, then it became strategic.
And the strategic part is this epiphany
It's the epiphany. This is digital energy. So, and I want to make one more point. With gold is not digital energy. Gold is not metallic energy. Not really. The problem with, it's a much weaker form because gold is losing 2 to 3% of its energy value every year, and because you can't really develop gold on a big tech network. And control of gold as an asset rests with the gold bankers, right? It's a much weaker thing. And so because it's weaker, there is no gold company, there's no gold miner that could pursue the strategy that we're pursuing. For example, if gold was really money, gold miners would never sell gold. They would mine less gold. They would hoard the gold, and they would borrow money to buy more gold. Right? But you see the opposite with gold miners. Gold miners overmine the gold. They dump gold on the market. They mine so much gold that they pay a huge 30% corporate income tax. Then they still have extra cash. So then they go buy back their debt. They don't borrow money at 2%. They could borrow money at 2%, Peter. Instead, they loan money to banks at 2%. So they're mining gold, tearing up the rainforest to mine the gold, to dump the gold, to drive the price of the gold down, to pay the tax so they can loan money so they can buy dollars to get a 2% yield. And then when they finish with that, they've still got extra money left. So instead of buying gold with it, they dividend that out to you, the shareholder, and then you pay tax on it. So gold miners are revving the engine to get US dollars and get rid of the gold, right? That's obviously more of a commodity strategy. If you believe that the price was going to go down, you would sell as much as you could as soon as you could. But with Bitcoin, you have something different. With Bitcoin, I think the unique thing here is that it's appreciating, right? Statistically, like 170% a year for the last decade, up 225% in a year. And because it's appreciating, you have a different strategy, right? Not only can you buy it, like like people joke, right? Like, are you going to be 5% exposed or 100% exposed? Like, I'm 500% exposed. I'm not 5%, 50%. No, we started with $250 million of capital.
Mm-hmm.
We bought $3.5 billion of Bitcoin.
Hold my beer.
It's like, okay, we really literally had 250 million capital because the other 250 million I had to give back to the shareholders in the Dutch auction.
Mm-hmm.
So we had 250 million in capital. 100% exposed would be buy 250 million worth of Bitcoin and wait, right? What we did was something different than that. What we did is we issued equity and we issued debt to buy more. So we expanded the capital structure. Now, why would you do that? Well, you would do that if the cost of the capital is less than the expected return on the asset. So what's the expected return on digital property? 170% for the last decade. Scale it down, 20%?
Still worth it.
30%?
Still worth it.
It's a property development strategy like the related companies or anybody else that, I borrow $10 billion, I build a building, I think I'm going to pay 4% interest, I think I'm going to get an 8% return. That means I scrape a 4% arbitrage on $10 billion. But what's more valuable than property, right? Digital property. What's more valuable than digital property? Digital energy. In theory, what is the most valuable thing in the universe? The answer is digital energy. Digital energy is the theoretical most valuable, most highly appreciating asset in the universe. And what's the likely yield? Heck, we've talked about that before. I mean, I think the price appreciates with the inflation rate and the fiat frame of reference you're in. If you're in Turkey or Argentina, it's going up very fast. Mm-hmm. If you're in the US, it's just going up. It appreciates with the technical utility. When I build it into Coinbase and Binance and Square and PayPal and Apple and whatever, it goes up. It appreciates with the adoption as people adopt it as a useful asset. MicroStrategy adopted it. Right? Bitcoin didn't go up because of the inflation and it didn't go up because of the technical utility. When the MicroStrategy effect is MicroStrategy adopted it as a treasury asset, then a primary treasury asset, then a financial strategy, and that created $3.5 billion of demand for Bitcoin, one company. And then the last reason it goes up is it goes up because of productivity of the civilization, or it goes up productivity of the network of people that adopt the asset, right? If hypothetically everybody in the world uses Bitcoin, 100% Bitcoin, and every other currency disappears, there's no inflation, then Bitcoin will appreciate in value with the productivity of the civilization and, maybe with the differential utility if there's any other asset that people might be using. But if Bitcoin's the only asset and it's the only currency, then it will appreciate in value every year based upon the true productivity growth of the human race, right? It's 4%, 3%. So what you're looking at long-term, it's going to go up 3, 4% a year, but that might be 30, 40, 50 years out.
Well, at that point, you might be looking for other assets to diversify and to get better than 4%. Maybe build a hotel.
I guess, the distinction I make on that is there's a macroeconomic strategy, and the macroeconomic strategy is I swap a weak asset for a strong asset. Mm-hmm. And then there's an investment strategy, and that's I buy an asset that I think is undervalued or underappreciated by everybody else, and I basically accumulate a portfolio of risk. See, I don't think I'm taking risk when I'm a macroeconomic investor. Like, for example, if you were to say, Mike, would you rather own pesos or gold? I'd say, well, gold, right? If you said, would you rather own gold than the S&P index? I would rather own the S&P index. If you'd rather own the S&P index than Bitcoin, I'd rather own Bitcoin. I'm just swapping an asset class for a different one. I'm not really taking this corporate execution risk. I think when you're an investor, when you buy Apple or Amazon stock, you're taking execution risk, right? Amazon might get unionized. Apple has a supply chain. Google can get fined by the EU, right? You've got political risk, you've got execution risk. I mean, Twitter has a new CEO today. What will happen? Well, that's the risk, right? There's no CEO of Bitcoin, there's no CEO of gold, there's no CEO of S&P 500 asset class, there's no CEO of land in Texas, right? Those are properties, right? These other things are securities. When you get into securities, you take a heightened degree of risk. And so if you're in the business of investing in securities, okay, well, you're running a hedge fund. And people said to me, well, are you running a hedge fund? No, I'm not running a hedge fund. I'm simply making a macroeconomic election. I don't view it as any riskier than if you lived in Argentina converting pesos to dollars.
Mm-hmm.
You're not a hedge fund to convert pesos to dollars, right? You're just making a macroeconomic, or you're saving your money as opposed to investing your money. And I think, will we ever get in those businesses? I don't know. That would be an election to take on new types of risk, and that's a long way out. So I don't really much worry about it because the opportunity for digital energy is just so extreme.
Well, it's so early. I think that's the point you're making. It's like once everyone has Bitcoin, if it's based on true productivity, it's 4% gain. Whereas right now, if you're going to be earning 170% a year, you might as well buy as much of this as you can to protect your wealth, but increase your wealth. But you're buying a lot. MicroStrategy controls a lot now, but there's no limit to how much you would buy.
If you have a publicly traded company as an operating company, you can hold up to 40% of your assets in a security on your balance sheet. Mm-hmm. So like if you're Berkshire Hathaway and you're buying Apple stock, right? At some point, there's a limit to how much Apple stock or how much other securities they buy because they bump up against this 40% limit. That's why Berkshire Hathaway will buy a railroad. That's why they own entire businesses, because otherwise they become an investment company per the SEC 40 Act. If you're an investment company, well, then you can own an entire portfolio of securities, but you lose all your other rights that an operating company has. So MicroStrategy is an operating company, and Bitcoin is property. Mm-hmm. If we started buying securities like ETFs of Bitcoin, it would become a security that wouldn't be property. And then we would start to bump up against all sorts of limits. But you could think of us as like maybe the world's first digital property development company. Like if I said to you, I'm going to have a public company and we're going to build out Vegas, or we're going to build skyscrapers in New York City. Well, is there a limit to how much of New York City you want to build? And the answer is, I want to build it all, right? But here's the limit. The limit is the natural appreciation in property values is more like 10% a year if the money supply is expanding at 10%.
But there are implications of owning or controlling that much Bitcoin. If Bitcoin does demonetize large aspects of property and other assets and currencies, as you say, entities that you can control could end up controlling, having a lot of power, a lot of a strong financial position. You could have more Bitcoin than the U.S. government at some point if they take their time to end up buying some. Most countries, do you think about the implications of that?
No.
You just buy it.
Look, if Bitcoin doubles every year for the rest of the decade, it might get to $100 trillion. And I suspect if the money supply expands at 15% a year, then it's going to double twice or 1.5 times, which means we'd have $1,500 trillion of stuff, right? So if the money supply keeps expanding and Bitcoin keeps doubling, Bitcoin's going to be 7%. Okay, well, big deal. So at that point, it will be as noticeable as the S&P index. And what do we be? We'll be a small part of it, right? But it gets exponentially harder to buy Bitcoin, you might have noticed, right?
Yeah.
It gets harder,
Yep.
right? We all know that, right? It's a
Mhm.
lot harder to stack at 60,000 than it is to stack at 10,000. But the people that were stacking at 10,000 were remembering back when they could have stacked at 1,000, regretting that.
Yep.
And then you get the Max Kaisers reminding us how he was stacking at like $12 or whatever it was, right? No, so I think everybody just executes their strategy. We happen to be the first public company out of the gate that established the ability to issue securities to buy Bitcoin, right? We established a Bitcoin strategy. How do we do it? Well, you know the story, the Dutch auction, plus all of the various steps.
And you shared that publicly, right? You made it like publicly available for other companies.
And some people go, well, why aren't more people doing it? But the answer is they are. Right, it's all just a matter of perspective. As I said, 16 publicly traded Bitcoin miners that I can count off the top of my head, and Riot and Marathon and the right. There are lots of companies that are coming public that are adopting Bitcoin strategies, that are issuing stock, that are issuing debt. Right, Marathon generated they signed a credit line with Silvergate Bank to borrow money against their Bitcoin holdings. So you've got banking coming into the space, you've got public companies, you've got FDIC insured institutions coming into the space. I don't know, I guess there's 30, 35 companies that are getting into the business now.
But these are all Bitcoin companies. Did you think there would be more companies following your strategy who aren't Bitcoin companies, who saw what you've managed to achieve with this?
No, I think it's hard. I mean, I think that they're coming at the rate that they can arrive. I mean, I've said before what I think are the impediments. One of them is the accounting is prejudicial, right? It's difficult accounting and it's indefinite intangible. And so if you have a cash-rich, well-capitalized company that works really well, that's growing, then if like an Apple or Google or a Facebook, then if you were to buy large quantities of Bitcoin, then the accounting converts the volatility into a liability, and you end up taking massive write-downs against your balance sheet, and you also end up with massive GAAP operating losses. And then you have to explain that to your shareholders, and that takes some courage. And you have to have a reason. For example, if you have more money than God, like more money than God, do you really have a reason to do something new? No, right? By definition, right? You have so much money, you don't have to. So the companies that are going to go through this are the ones that need to, or the ones that, not the ones that have infinite money that are growing 20% a year that have digital monopolies. They're the ones that are run by probably a charismatic, decisive CEO that either is the founder, and then I would bet the people that have them. If you find a value stock run by the founder who has a controlling interest in the value stock that's low growth, that has a lot of cash, that's got a low multiple, right? Those are the ones that would have the most to gain, the least to lose. Right? Whereas the high growth stocks, if your company's valued at 20 times revenue, because you're a story stock and you're whatever you're doing, and then you adopt this Bitcoin strategy, you're thinking, well, maybe my shareholders will blanch or there'll be some issue, and so I have something to lose. And yeah, you have something to gain, but with digital transformations, generally you have to hit that sweet spot where you don't have that much to lose, you have more to gain, but you have the resources to execute. And that's the attacker's advantage. And that in a nutshell describes why most incumbents don't make the digital transformation, right? Like, why did IBM and Nokia and Kodak and Polaroid get hollowed out? And why is Rand McNally not here and the like? It's, or what happened to Xerox? It's just all of these guys, they have a harder time being really decisive. Now, who has nothing to lose? privately traded Bitcoin miners.
Mm-hmm.
If you're a Bitcoin miner and you're private, you're like, well, I should go public, right? Like it's hard. It's harder to go public, but if I go public, my revenue multiple triples. And if my revenue multiple triples and I can keep the Bitcoin, that's good. And if I can buy more Bitcoin, that's even better. So the real key to the institutional adoption of Bitcoin in the public markets is a healthy capital market and a window that allows new companies to come public.
Mm-hmm.
And this is why generally it's the new companies in a capitalist system that bring new ideas, because they have everything to gain, nothing to lose. It's much harder for an incumbent to transform themselves, right? It does happen. It's just rarer, right? It's a little bit harder because they tend to be caught by institutional inertia. And the accounting is an inertia. There's fear of a new thing is inertia. There's how many people, we talked about this before, how many people are critical of Bitcoin that spend 100 hours studying Bitcoin? Can you name one? I can't name one.
I mean, I'm sure there are, probably because they've had a bad time trading alts, or they've had a bad time, like they've timed the market wrong, or they've over leveraged, but not really.
Yeah, so there's a lot of people with a lot of money and a lot of power, but they don't have the motive. And then what you've got is, you've got a lot of people with the motive and they don't have a lot of money. But when you start to have people with the motive that get into the capital markets, Marathon has $650 million more this month than they had last month, and they have the motive. So we're just seeing that. And I said before, sometimes we want it to go faster, but I mean, do you really feel comfortable if the asset was growing 500% a year over year, or would you not think that maybe that's a bit too much tempting karma?
I mean, we talk about this a lot. I actually like a more stable growth in the price. I would like the 4-year cycle to break. And so we don't think every 4 years is going to do the same thing, because I think it's not good for everyone. So yeah, I don't think it would be great.
Yeah, so if I said to you, Bitcoin's going to track at 170% a year for the next 2-3 years, then 150, then 120, then 100, then 80, then 60, then 40, then 30. That's not bad, right?
That's good.
I used the metaphor before of, the shock wave. We designed one airplane that can go faster than the speed of sound, like in 1965, the Concorde.
Mm-hmm.
And you know the story of the Concorde. And we flew it for a while, and it was a struggle, and it was never profitable. And then it eventually crashed and burned, and then we didn't do it again. So the Concorde was difficult. Just about every commercial aircraft, and even all the military aircraft, they fly less than the speed of sound. And the reason why is the speed of sound is the rate at which air communicates to itself. The airfoil is moving through the air, and if it's moving faster than the speed of sound, the fluid can't get out of the way, which means you create a shock wave, which creates massive turbulence, which is massive dissipation of energy, massive friction. This is like breaking the speed limit that nature gave you. It's like the speed of light, another important speed limit, right? Nature's got these speed limits. In a hydrodynamic situation, we call it the Hall speed. And it's the rate at which a ship can move through the water. And it's determined by Reynolds number, and it's the aspect ratio of the hull. So if you have a long hull with a narrow point, it goes fast, like a crew-owing shell. And if you have a very wide hull, it moves slower. When you try to break nature's speed limits, you get shock waves, you get friction, things explode. The cost of going faster than the hull speed of a ship is the cube of the velocity. You want to go twice as fast, it's like 8 times as expensive, right? So there's a certain speed with which an asset can monetize, right? There's a speed at which Bitcoin can grow. There's a speed at which we can create ETFs, and a speed at which we can give banks guidance to hold the asset, and there's a speed at which we can fix the accounting, and there's a speed at which we can educate all the senators and all the Congress people and all the regulators and all the mainstream media. And there's a speed at which people with billions of dollars can figure out the new thing. And when you try to go faster than that speed, you delaminate, right? And that's when you get like those sparks. And we see those sparks because we're going faster than that speed. And I think that it's very healthy if it backs down to whatever that speed is. And it seems to me that north of 100% a year is about as fast as you want to go. And if you have something which is really utterly compelling, then you just kind of hook onto it and hold on and let that evolve. I think we've got a decade of that evolution, right? It just takes that long for signal to move through the civilization. So
there is someone who has followed the MicroStrategy strategy in some ways, which wasn't a company which surprised a lot of people, which is El Salvador. I kind of referred to them very early on as like the MicroStrategy countries, because actually you were the first to do this. There can only be one first company to go out and do it like this, and they're going to take the biggest risk in some ways, but see the most benefits. As other companies start to adopt the same strategy, you get the compound benefits. I kind of feel like the same for El Salvador. I feel like as the first country to do it, they've taken the biggest risk. In some ways, I'd say Bukele's taken a bigger risk than you, but we can argue about that separately. But again, as other countries come on, they'll see the compound benefits of other countries coming on board. What have you made of the El Salvador story? And
the reason we haven't really taken that much of a risk, because if you read the bright line rules that govern publicly traded companies, it's very clear that a publicly traded company can hold property.
I didn't mean that kind of risk.
Yeah. And so our primary risk is our shareholder relations, right? And just communicating to our employees, our customers, our shareholders, our vendors what we're doing, right? That's our primary risk. I guess their risk is the same in a way, right? They're communicating to their citizens. They've just got more, right? Their citizens, the businesses in the country, and then all the other nations that they integrate with. And so they've got a massive communications effort as well. Our primary focus was balance sheet, right? And their primary focus seems to be more like currency, the P&L side. For example, if you're a country, the easy thing to do would be just to buy billions of dollars of Bitcoin. Just buy it. But they didn't have their own currency, right? So if you had a currency like your Turkey and you bought billions of dollars of Bitcoin, then you would be converting your currency into a Bitcoin derivative. And then by inference, everybody with the currency owns a Bitcoin derivative, and maybe the currency strengthens, right? That's easy to execute, right? It's much harder to execute the introduction of a new currency, right? And so I think what they wanted was the Lightning Network as a remittance network, right? And they want to put a bank in everybody's pocket, right? They want to give everybody a mobile application that serves as a bank. So what do you get with Shiva Wallet? You get a store of value via the Bitcoin asset. You also have the ability to move dollars around. And so you've got the stable coin or the stable currency in the form of dollars. You've got the Bitcoin as the store of value asset, and then you've got the Lightning Network as the remittance network. So they're sidestepping Western Union, they're sidestepping Visa, MasterCard, they're sidestepping the need to roll out branches of banks, and and they're introducing a new ideology, a discipline of Bitcoin as store of value, or introducing digital property in the country. And then, of course, they paired it with some favorable tax laws that would cause a Bitcoin or crypto entrepreneur to be attracted to El Salvador. And those I get, and I suppose, and then they've got the added twist of the volcano mining, which is a separate thing. Let's monetize a volcano. What I think, Peter, is I think the world wants two things in a big way. The world wants digital property in lieu of gold, in lieu of analog property and investment property, and in lieu of holding securities. They want digital property at any scale, at the speed of light, friction-free, to 8 billion mobile devices. And that is Bitcoin. And they want trillions of dollars of it, 10 trillion, 20 trillion, 100 trillion, 200 trillion. They want that. A lot of people don't know they want that. But I guess I would say 5 or 10% of the people know they want that. The other 90% don't know, but they'll figure it out. Saylor, the engineer, thinks what they really need is digital energy. And most people definitely don't get that, right? I think the entire 21st century economy needs digital energy, which means $500 trillion worth of digital energy moving at the speed of light, friction-free, from 8 billion devices across 100 million companies, no power loss, superconducting network. That's what I think. I don't think most people know they want that. I think a lot of people know they want digital property, but I think even more people want digital currency. And by digital currency, I mean they want the US dollar. They want the US dollar stablecoin on a crypto rail, let's say the Lightning Network, but it could be any network. They don't really give a crap. What they want is I'm in Turkey. You follow the news, like I'm in Turkey, I have lira, I want to convert my lira to dollars. Okay, my lira is dollars. It's not going to debase, but it's in a Turkish bank. How long before an edict comes out freezing the bank accounts and converting your money from dollars back into lira and devaluing it for you? Well, I mean, that's the Argentine playbook, right? That happened to me.
Yeah.
That happened in Lebanon.
Yep.
That happened in Cyprus, right? It happened in Russia. It happens in every currency collapse. It happened in Afghanistan. So if you're in Turkey, what you want, or Argentina, or wherever, what you want is dollars, but you can't get the dollars because there's no bank, right? If there was a bank, you don't trust the bank. So if I were to go to the street, if I were to take a poll of like 100 people in Africa or South America or Asia, and I would say, how many of you would like to convert all your local currency into dollars? Name one currency in the world that's stronger or more desirable than the dollar. And don't say Bitcoin, but say like a fiat currency.
Swiss franc?
Maybe debatable, right?
Yeah.
But maybe, right? Not Chinese, right? Not CNY, just about everything. We could have a little debate, but the Chinese currency would collapse if their capital controls came down.
Yep.
Right? The reason they have capital controls in the Chinese wall is because literally they printed too much CNY, the currency would collapse. And they've hyperinflated the economy. Their multiples on the Shanghai Stock Exchange are 3x the US stock multiples 2 years ago. Right? And so if you think about it really hard, you realize the Chinese have an inflated currency. We know the Brazilians do. We know the Venezuelans do. We know the Argentines do. We know, fill in the blank. Right? We can debate, are the Europeans better custodians? Not clear. But bottom line is, everybody in the world, they either want the dollar or they want a currency kind of pegged to the dollar. What you would say about a euro or a Swiss franc, if you liked it, is I like it because their bankers make sure that their currency stays stronger than the dollar.
Well, listen, one of the things that it's been really interesting about traveling a lot over the last 2 years is the amount of places where the dollar is accepted, which is incredible. It's not like that with the pound. I mean, the pound's fairly stable, but I can only spend the pound in the UK. That's it. But I've been to a number of countries around the world which will just accept the dollar. I had it in Cambodia, An interesting thing in Cambodia, they didn't want any with any creases in. It's most of South America. People want dollars. It's liquid in a lot of countries.
Something I observed, and I traveled in Europe before the euro.
Okay.
Before the European Union, and I'm sure you did too, I traveled around. Menus are all in different languages.
Yep.
Different currencies, different languages, money changers, the signs are all different languages. After the euro, one thing I noticed is all the menus switched to English, which is very interesting to me. It's like it was always English and Italian, English and French, English and Greek, at least in the wealthier part of the EU. And what I saw was the European Union crushed every local culture. And also crushed every local currency. If you look at currency exchange, everything collapsed to the US dollar after the EU formed. It used to be the dollar was like 30% of currency exchanges, and then 40, and then 50, and eventually it got to be like 90%.
I'm not sure local cultures have been that crushed. I've traveled a lot around Europe.
I think my point is the English language spread rapidly with the rise of the European Union. And you know why, because the Europeans needed English to communicate with each other. And the dollar spread. And so what we've seen for the last 21 years is a trend of the spread of the dollar and the spread of the English language. Now let's come back to the dollar. I mean, the big idea here is 180 currencies. 60 of them are pegged to the dollar, 66. Mm-hmm. There's 130 floating currencies. How many do we need? How many really can compete? Not more than a dozen. So I really think what you're going to see is if the citizens had their choice, you would see a collapse of 100 currencies overnight, and everybody would switch. Like there's not a single South American currency that would survive, not a single African currency that would survive, right? The euro, the yen, maybe. The yuan is weak. The CNY is weak. The ruble, no, right? And so the question then is, well, why haven't they already? And the answer is because there's no digital dollar. There's Tether. Tether, which is an entrepreneurial digital dollar. Tether and Circle.
Actually, if you speak to Alex Gladstein, he's a huge supporter of the Tether because it's like absolutely essential for people in places like Palestine. Alex Gladstein.
Yeah.
Human Rights Foundation. He's places like Palestine or Lebanon, places where the currencies are collapsing and people talk about them needing Bitcoin, but Bitcoin's still volatile. They do need that Bitcoin isn't the stable currency they need for day to day. And he talks about Tether being super important.
Yeah. And it is. Tether is the first entrepreneurial example of a digital dollar, but it's a security. It's a company. There's a company behind it. There's people working it. It is not a property, and it is not an FDIC insured bank, and is not a public company, and there are no auditors, and people aren't quite sure what backs it, and so therefore we have seen stable coins go from nothing to 130 billion. And I guess 30 billion to 130 billion in 12 months or so, a massive explosion. But the world wants 10 trillion worth of this. It doesn't want 130 billion. Right? It's one of those things where the use case right now is the gray market and offshore crypto exchange settlement and crypto trading and hobbyists and crypto specialists, right? The use case that will drive it to 10 trillion would be everybody on the planet using it to send money around, right? Like Apple Pay to everybody, or global remittance of multinational corporations. When Apple and Amazon and Facebook and Google and ExxonMobil and governments move money via stablecoin, right? It won't be 100 billion, it won't be a trillion, it might not be 10 trillion, it might be 20, 30, 50 trillion, right? So the real opportunity is digital currency. You just have to trust it. And so I think that if you look at the regulatory actions in the past 3 months, the President's Working Committee on Stablecoin published their report, and the message is clear, which is we want FDIC chartered institutions to issue stable coins. And if you're not FDIC insured, you need to stand up to the same standards as an FDIC approved bank. And I read it as it's a transition from the first decade where the industry was entrepreneurial, and Circle and Tether are entrepreneurial, and Gemini and Binance, right? They're entrepreneurial, and good for them. They made it work. But the next phase is institutional, which is we really want JP Morgan to issue $1 trillion of stablecoin, right? But if you're Tether, maybe that's not so good for you, or maybe it is, right? If you're Silvergate, you're kind of here. Silvergate doesn't want JP Morgan to do it. Silvergate wants to do it. And then Tether is here, right? And what you have is you have the early movers that delivered the products. And then you have the institutional late adopters that are staring, and then you have the ones in the middle. Silvergate is just as they're just as progressive as MicroStrategy, right? Mm-hmm. Silvergate and MicroStrategy, Coinbase, we're all crossing the chasm companies. All three are publicly traded. Publicly traded. And so we have one foot in the Bitcoin world of decentralization and the crypto world, and another foot in the institutional regulated world. And we have an opportunity to grow. Now, I think that, and we come back to this point that I was making, it is undisputed that the world wants trillions of dollars of stablecoin. We know they want it. And it's pretty clear the world needs trillions of dollars of digital property. Needs it. A lot of people know it. Not everybody know it. Right? Those two things are clear. Everything else is murky. Right? The rest is unclear. And coming back to El Salvador, well, they've got a currency. The real currency is the dollar. Right? The property is the Bitcoin. The entire system would work much smoother if you had US dollar stablecoins moving on Lightning rails. I think the reason that they had to make Bitcoin legal tender was because they couldn't move the US dollars back and forth through the Lightning wallet properly, or using Bitcoin, because Bitcoin's a transport protocol to move the money cross borders or something like that, right?
I'm not sure on that one.
You might have some other insight, but feel free to share.
I think it's for a number of reasons, but I think actually is that one of the reasons they wanted to do is get more Bitcoin in the country, owned by individuals, the state, companies, because they wanted to mitigate the effects of dollar debasement.
Yeah, I suppose it encourages that.
Yeah,
and I'm all in favor of that. But I guess my view on all this is it doesn't really make sense for Bitcoin to be spent on anything. We come back to the fundamental issue, right? The rational construct is an inflationary currency and a deflationary property. Like, if you think about this really deeply, you don't really want to buy a Tesla with a Bitcoin, because Bitcoin's going to $1 million and the Tesla's going to zero. Mm-hmm. What you want to do is borrow $50,000 at 4% interest to buy the Tesla. And then in 10 years, you'll have the $1 million and you'll be able to buy another Tesla, and then you'll have $10 million. So if what you want is to construct a system that makes you wealthy and keeps you wealthy and keeps all the gears of commerce spinning, the system that works best is everybody holds a digital currency and they hold a digital property or a digital asset. They're both technically assets, which is why I distinguish one as property and one as currency. And then the strategy long-term is you keep financing the property to the currency. And it's a benefit to you. For example, if you live in Argentina and you can own Bitcoin, you don't want to pay for things with Bitcoin in Argentina. You want to borrow pesos against the Bitcoin and pay for things in pesos, because the peso is worth 1% of what it was 10 years ago. So if you borrowed 1,000,000 pesos, it's going to zero and the Bitcoin is going to the moon. So you really want both. And you want to discourage people from ever selling or trading the Bitcoin. And you want to encourage them to, what you really want to do is accelerate the development of a Bitcoin banking sector where you can own the Bitcoin and borrow against it and securitize it. And so I think El Salvador's a complicated case because they don't have a currency.
Yeah.
Right? If you had a currency, it would be different. They don't have a currency. They have to have the US dollar. I think it's pretty clear in the rest of the world, though. If we come back to this issue of currency, Peter, there's 100 million companies. And every company has accounting systems that are wired for paying their employees and paying their vendors and selling their products in the fiat currency in the country in question. So if you were to calculate the amount of money spent on those, the accounting system is the nervous system of all those companies. The nervous system of the companies is set up so like Oracle and SAP are the only two companies in the world that compete really favorably against Microsoft. They own the accounting systems of every big company in the world, and they're almost impregnable. Like if you wanted to rip out the accounting system of Coca-Cola, and you spent a decade and you had $10 billion, you probably couldn't do it in a decade for $10 billion. If I held a gun to your head and I said, I'm going to kill you and shoot everybody in your finance staff if you don't rip out the accounting system, they'd all be dead. The accounting system isn't changing. It's that inertia. It's literally like trying to rip out all of the veins and all of the nerves in your arm and keep the arm. It's too...
It's a brain transplant.
It's too integrated. So the economy of the world is wired to run on those currencies. And the only way that you get rid of the currencies is you arm wave away every government and every corporation. So if you can imagine a future where you don't need companies and you don't need governments, then you can probably not have the fiat currency. But it's definitely not happening this decade.
Well, that's an interesting segue because we can talk about the revolution versus evolution because there's a certain cohort within Bitcoin of people who are consider themselves sovereign individuals or seek the sovereign individual lifestyle, who are maybe more hardcore Bitcoiners, anarcho-capitalists, who definitely would be in the cohort that who challenge you, who would maybe consider your strategy is defending the dollar, whereas they want to replace the Fed and they want to bring down government and they want to end sovereign currencies. They want everything to be on a Bitcoin and a Bitcoin standard. Now, look, I'm in the place where I'm not an anarcho-capitalist. I believe in democracy. I don't believe in the big red button of a libertarian ideal, even though I think libertarians have great ideas. But there are people who are saying that to you. And I think the problem, even with the revolution, is if you burn down the government, the state, what we have now, it will just be replaced with the same. Whereas, to your point, the evolution allows you to incrementally make things better.
Yeah, I think there's an evolutionary view and there's a revolutionary view. And if you look, and the revolutionary argument is the currencies are bad, taxes are bad, governments are bad, big corporations are bad, the banks are bad. And we don't want to support any of them. And we're revolutionaries. The evolutionary view is I invented oil and steel and electricity, and Isaac Newton invented engineering math. And is the world a better place with calculus, oil, steel, and electricity? And should we introduce it? And the evolutionary view is apolitical. It's like it's constructive and it's also cooperative. Right? Every country can benefit from calculus, steel, oil, and electricity. Right? And computers. Every country, every ideology, and the human race is better. If you look at the evolutionary view for Bitcoin, the evolutionary view would be Bitcoin is digital energy. It's a technology. Therefore, it's good for every country. And Bitcoin is digital property, and it's a better balance sheet asset than cash or credit. So therefore, every company can and should buy Bitcoin. And it's also, because it's digital property, every country can use it as a treasury asset, and they can back their currency with it. So I'm not asking for Turkey to abandon their currency, or United States or Europe or Korea or Japan or Singapore or Malaysia to abandon their currency. I'm just, instead of telling them they have to abandon their sovereignty, right? And there's irony here, right? Like, people that are in favor of sovereignty want someone else to abandon their sovereignty, right? Right? Instead of telling the Prime Minister of Malaysia that I disagree with their currency and they should disband their police force and stop taxing people and disband their army, I could just say, this Bitcoin will make your country richer and better. So it's a lot easier, just like I'm more likely to be able to introduce oil and steel and electricity into another nation than I am to be able to introduce my political system or my ideology. If you interpret Bitcoin as technology instead of ideology, then instead of taking the position that we don't want to have money in the bank, our position would be, we don't mind money in the bank as long as that money is Bitcoin and not gold, or as long as it's Bitcoin and not S&P, or as long as it's Bitcoin and not dollars, right? Change the money, keep the bank. Maybe you don't trust the bank, but on the other hand, if your brother-in-law is the chairman of the bank, and if you're at Thanksgiving dinner, and you say to your brother-in-law, if your bank starts custodying Bitcoin, your stock price will triple and all your employees will be delighted and you'll be successful in your job and your family will live happily ever after, that might work. And if you start the conversation with, Bitcoin's going to destroy your bank, you're a 20th century relic and we don't like banks or bankers and we just think you should just go ahead and quit your job. But before you quit your job, you should convince the board of directors to disband and liquidate the bank. Not likely to happen, right? Like, no one's going to liquidate their country or liquidate their bank or liquidate their company or liquidate their family or liquidate their livelihood because of your ideology. And why should they have to? So the evolutionary approach is, look, Bitcoin is technology. Your Apple, this is beneficial to you, build in the iPhone, right? Your United States, if I'm meeting with Jerome Powell, right? Bitcoin is not the currency to replace the dollar. Bitcoin is an asset that people can hold in lieu of gold or S&P indexes or property. It'll make the country work better, and it's good for the United States. It has the benefit of being true, right? I guess the real issue here is, if there's $100 trillion worth of property in the form of gold and silver and rental income properties and S&P indexes and bonds that are overvalued, and Bitcoin can simply replace them all, and every bank is more successful and every investor is more successful and every country is more successful and we all live happily ever after, is that such a bad thing? Right? It's like, what's wrong with living happily ever after, right? Like it's we have the phrase Bitcoin fixes this. Well, I think Bitcoin also fixes every company and every governmental institution. So it's better if when you're thinking this through, I think it's better if you ask the question, is Bitcoin a solution to that institution? And the answer is yes, right? You get the sense sometimes there are some people in the community that if Jerome Powell were to make a press release tomorrow saying, we've seen the light and the United States is going to buy $100 billion of Bitcoin, they would be unhappy about that.
I think they'll be conflicted.
It's like they don't want other people to get the secret. But of course, the point is, if Bitcoin is money for enemies, isn't the bigger idea Bitcoin is technology to make the world a better place? And if everybody adopted Bitcoin, then maybe we wouldn't be enemies. Like at the point that a company, let's say JP Morgan, what's wrong? Do I mind if JP Morgan starts custodying $100 billion of Bitcoin? They'll pick up the phone, call all their clients will start buying Bitcoin, and the price of Bitcoin will go to the roof, and it'll demonetize $100 trillion of other assets. And that means that the cost of food and housing and clothing and gold jewelry will go down. And it means that society will get more rational. And it means that the effective ability to pay deficits with inflation will be deteriorated. Over the long term, when you look out long term, meaning when Bitcoin is $500 trillion of the economy, then the marginal ability of political systems to inflate the currency is going to deteriorate.
Because it's a check and balance.
Yeah, let me take a different tack at this. I do think Bitcoin is going to collapse currencies, but it won't be the US dollar. It's going to be the 100-week currencies. And I'd even probably take that back and say it a different way. I really feel like the next step in the economic evolution of the world is the United States dollar is going to collapse all 100-week currencies if it gets on a crypto rail. If we have stablecoin US dollars, I think that every currency other than the top dozen is going to collapse, and all those countries are going to dollarize. And I think that Bitcoin is going to collapse all the weak assets. We know enemy number one, gold. Gold is just an awful monetary asset, but it's not the only one. Investment properties and timberland and, buying up natural gas rights, all the things people do to avoid putting money in a savings account that generates 0% yield. They're all choices.
They're a bigger leap, though. I mean, the leap for a better currencies, an immediate, obvious problem to people day to day. Someone in Turkey, I was reading Turkey, just the everyday problems people are having now with the collapsing currency. They're skipping meals now because they can't afford food. There was a guy who put on, my brother pointed out to me, somebody put on Twitter the other day, he said, just been to Turkey, it's amazing, everything's cheap. And there was a guy who replied to him, he said, not for us. So there's that immediate pain point, like, I need that right now. Owning Bitcoin instead of owning property, like a rental property, isn't an immediate pain point to somebody. So that leap's harder for people to make.
Yeah, so there's two transformations. There's digital transformation of currency, and there's digital transformation of property. And the digital transformation of currency is something that will run very fast and very hard, and the Chinese clearly are concerned about it. Mm-hmm. The way the country is concerned about it is they're going to put in place capital controls, and they're going to be regulating the currency. It happens that Bitcoin has a role because Bitcoin and the Lightning Network is a way to move digital currency, right? Even when Jack Mallers talks, right, when he's talking, he's saying, well, what people want to do is send $25 from Chicago to El Salvador, so we convert it to Bitcoin, we wire it, and we flip it back again on the other end. What they're trying to do is they're trying to move the medium of exchange at the speed of light, and that's fine. The path of least resistance is the path of is the strategy of most likely success, right? It's like, if you want to be successful, then you step back and say, what am I trying to do? Well, I'm trying to give 8 billion people the strongest currency I can with the least amount of effort. And the strongest currency is the dollar. And the least amount of effort would be to put it on some kind of lightning rail or even a centralized finance system, put it on Facebook or put it on Apple, right? The problem is just they don't go to 8 billion people. Mm-hmm. But everybody in the world wants that. And then the second thing to do is give them a property asset that they can hold as a long-term store of value. And if we focus on those two things, like, what won't we focus on? I don't think we need to topple every government in the world, nor do I think we need to rewire the accounting systems. Here's the problem with the accounting system. I've already pointed out that it is physically impossible to rewire them. For trillions of dollars, you couldn't do it. But let's say it was possible. it's still illegal, okay? Which means you have to topple the government, because the distinction between currency and property is a bright line distinction in the tax code of every nation. And the IRS determined in 2014 that Bitcoin was property and the US dollar is currency. In El Salvador, they made it possible to transfer Bitcoin without paying a tax. But in every other nation on earth, the bright line establishment is when you transfer property, you owe a tax. Mm-hmm. And that means that no rational investor would ever pay for anything with a property, and no company would be able to pay for anything with the property, because you're accelerating a taxable event. So unless you're willing to default on your taxes to your nation state, you can't use a property as a currency. You just can't. And so now you've got a simple observation. Do you simply want to give $100 trillion of dollars to everybody in the world and fix that problem? And do you want to give $100 trillion of property to everybody in the world and then improve the world? Or do you want to literally deconstruct every country and every nation state? And I think the answer is, like, when you have the ability to make $100 trillion peacefully to the benefit of everybody, which is go left, that's the evolutionary strategy, and the enemy is gold. But if we just declare war on gold, it could be a $100 trillion asset. I'm telling you, Bitcoin goes to $6 million a coin. And I don't know, the nation of gold, puts out an arrest warrant for us, right? What's going to happen if we declare a war on the nation of gold and we stop paying our taxes to the nation of gold, right? Nothing. And Bitcoin goes to 6 million. Or we can be in a dispute with every mayor, the FBI, the CIA, Interpol, the United States military, the EU, everybody that's a patriot, everyone that's a nationalist, every political party, every politician, every corporation, including Apple, Amazon, Facebook, Google, every piece of technology, every institutional structure. You could do that. And is it better? No. You're not getting any more. You're not getting any more, right? I mean, it's literally like, this is the path of least resistance. We have a technology. It's digital gold is worth $100 trillion. And this is the other approach. It's a digital currency. We want to replace nation-state currencies, and we wish everybody would do that. And I guess it's kind of a philosophical issue, but if you think about it enough, like if you were a public company CEO, go interview 500 public company CEOs and ask them if they could physically rip out their accounting systems and if they could do business with the property. And every one of them is going to say, I can't do business with the property. It's not practical, right? It's not legal. I'd be fired by my board for doing it. And here's the last point. It's like 3 people can buy $3.5 billion worth of Bitcoin and drive up MicroStrategy stock by a factor of 10 and make $10 billion for the shareholders. 3 people. Or I can have everybody quit, rip the bottom out of the company, destroy the company, lose everything, and not make the money. I mean, that one of them is the revolutionary approach, the other is the evolutionary approach. So I think it's kind of a moot point. And what's going to happen is the industry is maturing, and it's going to move from the entrepreneurial phase, which was go fast, break things, we don't have a license, this is really cool technology, look what we can do. It's going to move to the next phase, which is the institutional phase, which is, oh man, Silvergate Bank is issuing stable coins, and I have to get an FDIC charter, or I have to come public, or I have to file this. And I think if your goal is to make the world a better place, I think the world will be a better. Instead of comparing Bitcoin to the dollar, compare the dollar to the peso. I see that. I think the false equivalence that happens all the time is people go, "Why would you bet? Why do you side with the dollar over Bitcoin? And the answer is, I'm not. I'm siding with the dollar over the peso, and I'm siding with Bitcoin over gold. And it just happens to be a bipolar, or like a dual model. In an inflationary environment, you might say, I guess this is my theory. In an environment where you have nation states and fiat currencies, the money decomposes into currency and property. And one is an asset, one is a appreciating asset, one is a depreciating asset, and it always happens. And the only question is, what is the property and what is the currency, right? And 100 years ago, maybe the currency was whatever, and gold was the property. And then for a while, the property was sovereign debt. And then lately, before Bitcoin, the property was S&P index funds, or it was real estate. And right now, the property is Bitcoin. And as long as there are governments on this earth that have the will to create their own currency, you're going to have this issue. Maybe you'll get some idealistic governments, like maybe you get the El Salvador model, but El Salvador is not even an idealist. If El Salvador was completely idealistic, they would have adopted Bitcoin and abolished the dollar, right? And you could make the other argument, which is, if they had simply said Bitcoin's property and the dollar is the currency, and then they gave everybody the Shivo wallet with the Bitcoin, it would have been less disruptive to all the businesses that have to take Bitcoin. They just take stable coin on the Lightning rail. I think that at the point that we start to see Lightning wallets, like the only Lightning wallet you want, in my opinion, is one Lightning wallet that has dollars and has Bitcoin. You want to be able to move the dollars at the speed of light and the Bitcoin at the speed of light. Mm-hmm. At the point that you have that, I think that that's the killer application for the world. Then every company operates with its existing accounting systems. Then you don't have to change the tax law, right? In El Salvador, they changed the tax law, yep. But what's the likelihood that in Europe or Japan or the US, they're going to change the tax law and let you transfer property without capital gains tax? Yeah, zero. Not at all.
It's not going to happen.
But here's my last point. It's not even a good idea. Like, be careful what you wish for. Like, if you can transfer Bitcoin without a capital gains tax, you're more likely to do so, right? Mm-hmm. But you shouldn't, right? So it's like the people that moved to Puerto Rico.
Yeah.
Like, I moved to Puerto Rico so that I could sell my Bitcoin without paying tax. And my answer is, why don't you just stay in the US and not sell the Bitcoin?
Yeah.
Because if you had sold Apple, Amazon, Facebook, Google, or Microsoft stock at any time in their history at no capital gains tax, you made a mistake. And I would say, if you really are a Bitcoin believer, then the only thing you ought to be doing is buying as much Bitcoin as possible, and you ought to find a bank that will loan you money against your Bitcoin at the best, most favorable terms. And your plan ought to be, I'm never going to pay a capital gains tax the rest of my life. And to the extent that I can construct an asset-rich portfolio of a lot of Bitcoin, then I can just live off of borrowing the Bitcoin, and I'll never pay income tax the rest of my life.
Nice.
Right? And if you can leverage up, right? No income tax, no property gain, no capital gains tax. And so the fallacy is thinking it's a currency in the real world. It's not a currency, it's a property. It's going up in value. You should not ever want to depart with it. And in theory, the smartest thing you could do is go to a country with a collapsing currency, borrow that currency, buy Bitcoin, and then incur a bunch of expenses in that currency that is collapsing, right? I mean, that's wise. And as long as the US dollar is losing 15% of its value a year, every single person in the United States can borrow money at less than 15% interest. Mm-hmm. If you're borrowing money at 2, 3, 4, 5% interest, everybody has a positive 10% arbitrage just off of the currency weakening, which means that, if you don't have debt in the weakening currency, then your portfolio is half as big as it otherwise would be. Like MicroStrategy, we've got $2.2 billion of debt at 1% interest. But that only works as long as there's a dollar, right? Mm-hmm. So we're basically paying 1% on 2.2 billion, and then we're lending it out to the Bitcoin network at 170% theoretical yield. So we're scraping 169% theoretical yield. If you wave your magic wand and you make the currency go away, where's my 169% yield go to? When we get to nirvana, right? And this is practical. When we get to nirvana, I'm going to eliminate all nation states. We're going to create the one true great company. I'm going to convert everybody's accounting system to Bitcoin, and everybody's going to use Bitcoin and Satoshis to buy everything, and Bitcoin's going to go up in value 3% a year. And now your arbitrage, and it's going to cost 3% to borrow it. And so, for that, though. So it doesn't work anymore, right? Like you have an opportunity right now to be an early adopter, and your theoretical payback is 150% a year now because of the existence of currencies. That works for about the next decade. Then it works slower for about another maybe 10 to 20 years. And then digital property demonetizes all the other properties. All those other prices come in, and 15, 20 years out, the government's ability to print infinite money is dramatically decreased, right? And if the government can't print infinite money in the year 2037, then there'll be a lot more debates in the Senate and Congress about tax. And at some point, there'll be some tax, and they'll tax people. And then when people realize they got to pay a tax, they'll go back and say, cut the budget. And we will introduce fiscal discipline with some political process. But that's like 15, 20 years out, right? That's a while out. And I think, Peter, here's one of my primary frustrations. I look at, I watch Twitter and Bitcoin Twitter. It's like, there's only one useful thing that any of us can do every day when we get up. One thing that matters above all. That one thing is convince someone to convert some other form of property into Bitcoin, right? Evangelize Bitcoin, educate Bitcoin. If you get up and you talk to 100 people and one of them takes $1 million and they sell 1 million of stock and they buy Bitcoin, or sell 1 million of gold and buy Bitcoin.
You've done your job.
Right. And this is why I'm frustrated when people say, we believe in sound money, half of it's gold, half of it's Bitcoin. Well, no, it means you invested millions of dollars in the enemy of Bitcoin. Sell your gold, buy Bitcoin. Take your money out of your, sell the bond, buy Bitcoin, right? Sell whatever your property or whatever your asset is and buy Bitcoin. That's the one thing. We don't need to make any other enemies, right? Like we're not going to fix, fill in the blank. How do you feel about this government's policy and that government's policy in this city and that tax edict and this? We're not going to fix that. The one thing that we can do,
fix the money.
But what is that? Just, what you want to do is you want to find everybody with money and you want them to buy Bitcoin. Right? You don't need to change their political convictions. You don't need to change their religion. You don't need to change the food they eat, right? You don't need to change their views on on medicine. Right? Those are other battles.
Yep.
There are other people that are signed up for those battles, but that's their conviction. But I feel like every one of those battles we get into is dilutive, right?
I see what you're saying. Yeah.
It's a dilutive distraction. I have hundreds of opinions, thousands of opinions, but the only opinion that I really think is worth uttering in public is Bitcoin is good. Bitcoin is good technology. I don't care who you are, where you're from. If you sell the other stuff and buy Bitcoin, you'll be better off. Your country will be better off. Your religion will be better off. Your ideology is better off. Your family is better off. Your company is better off. And I think when we get drawn into these other debates, well, they suck up bandwidth. right? They suck up the strength. They're all just kind of religious fights over stuff. But let's take custody, right? Is multi-sig self-custody better than single sig, better than having money in cold storage at Coinbase, better than having it on the exchange, better than having an ETF, better, is it better to do this or that? It's like they're second order issues because only $1 trillion is in the Bitcoin system and 500 trillion is in the other system.
Let's go get it.
And so instead of us fighting amongst ourselves, all we really want to do is when we're 500 times bigger, then we'll deal with that, right? Everybody should be able to have their views and they've all got, don't judge people, right? 83-year-old dude wants to buy the Bitcoin futures ETF. And he's going to do it in 5 seconds with a phone call. And if it's Warren Buffett, and if Warren Buffett wants to buy $50 billion worth of the BITO ETF, on the margin, it's better than if he bought gold. It's better than if he bought land. It's better than if he bought Apple stock, right? And so we ought to just welcome everybody into the ecosystem by whichever route they take. And we should just be trying to channel everything constructively toward a laser-like focus upon Bitcoin. Like, I don't agree with your country, but I wish the Treasury was one Bitcoin standard.
I see what you're saying.
Just, and here's the other fundamental point. It's like, we can fix half the world, but not the other half. Like I've said, I think digital energy is worth half of everything. If the world's 1,000 trillion, I think that digital energy is 500 trillion. We can call that money. The money is 500 trillion, however you want to deal with it. We have a solution to half of everything, but we don't have the solution to the other half. I don't have this. What's going to replace Afghanistan? When the United States went into Afghanistan and toppled the Taliban, what do we replace it with? Did we have that solution or Iraq or Lebanon? Like, I don't have this, like, what do I think about Turkey? I don't have the solution to govern Turkey and replace the lira. I don't know how to do that. All I know is that
Bitcoin makes it
more
better.
Bitcoin, better. Right? And, you're not going to always agree with politicians, but, the more Bitcoin in the system, the political system, then the better it is. It's we're back to Isaac Newton.
Yeah.
Rewind to Isaac Newton. Isaac Newton was probably one of the most monumental contributors to truth and integrity and humanity and civilization in the history of the world. You can trace so much to that one guy. He gave us math. And, we had arithmetic, but the mathematics necessary to build the civilization to make that light work, to make this work, to make electricity work, to fly, to make his headphones work, to make this work. This is all Isaac Newton. But he only fixed half, and the communist regimes got it, the dictatorships got it, and people you disagree with got it. It's math for enemies. But even so, the world is better when we spread this. And every time we spread Bitcoin to one more organization, right? We could say they get corrupted, but what's the opposite of corrupted, right? They get corrected, right? They get virtualized. We're spreading virtue bit by bit. And it's certain. If I go to Jamie Dimon and I say, Jamie, the Bitcoiners' hope and vision is for JP Morgan to go to zero, and we're going to replace you with a Bitcoin mining rig and a multi-sig wallet.
Yep.
I don't think we're going to get his cooperation.
I agree.
Right? And nor are we going to get the cooperation of anybody that works at JP Morgan. And if we go to JP Morgan and say, Bitcoin is a superior property to gold or another investment choice for all of your clients, and your bank can triple its market cap and all your clients can double their net worth, and your career will be enhanced and the world will be a better place and you can handle it safely, because it's just digital property technology. Like, I guess we should be in that business. and they'll get in that business,
Yep.
and they won't do the multi-sig cold storage, hardware device. That's fine. But the people that do this will be owning $10 million Bitcoin, and they bought it when it was $100. And when you have $10 million Bitcoin and you are as rich as Jeff Bezos, you can go ahead and create your own anti-bank or your own thing, and you can change the world. But the fundamental thing is, before you change the world, get the money.
Yep.
Right? And maybe first fix the money, to your point. If we fix the money, we fix half the world. You will be able to go work on the other half. The other half is highly controversial.
Yep.
Nobody can agree with anybody on anything else. It's highly controversial.
It kind of makes sense now thinking about your Twitter and what you talk about, because you basically only talk about Bitcoin, and you see other people comment on Bitcoin who maybe aren't within the Bitcoin community. And the Jamie Dimon. And then what you do is you come in and you leave a comment underneath where you just explain it to them. You don't get in fights. You don't deviate from that.
Yeah, my view on Twitter is you should be cheerful. You should be constructive. You can't browbeat anybody. No one's going to change their mind if you embarrass them or insult them. And there are some cases where there are people that clearly don't understand or appreciate Bitcoin the way we do. Mm-hmm. In that case, I might post underneath their comment. I don't expect to change their mind. What I expect is perhaps I can educate their followers.
Yeah.
If you have 2 million followers and you say Bitcoin is boiling the ocean, I'm not going to change your mind, but I'm going to say, well, it really isn't boiling the ocean. And if you want more about it, you can click here. There's a lot of work on it. Now, I might get their attention. So if I get the attention of someone that is either ignorant or opposite, in their point of view, then maybe I can open up a dialogue with them. And probably you're going to change their mind in private more than in public, or maybe you'll just register with them that you exist. But really, Twitter is, it's not really a battle to change the minds of the blue checks that have carved out their position. Mm-hmm. It's actually a battle to capture the hearts and the minds of people that have not yet made up their mind or don't know. And so when 57,000 people look, and you say something constructive and cheerful, then maybe they're drawn to do some research and discover. Now, if someone famous, let's say Rockstar says Bitcoin is boiling the ocean, I'm not going to go to their Twitter feed and say, well, actually you're stupid, and have fun staying poor, because all of the people that like their music are going to say, you just insulted. They don't know what Bitcoin is. All they know is that you just insulted their favorite musician, which means that they just kind of click negative.
Yeah.
So there's no point in me either venting or injecting any toxicity. All I think is there are people that might read that, and I have a chance to offer a constructive point of view, and maybe I can be cheerful, or maybe I can bend them, or maybe Joe Biden post the other day, it's Small Business Day, So I go and I troll Joe Biden and I say, well, small businesses should consider converting to a Bitcoin standard. It can help them compete and it'll be good for their business, and Bitcoin is hope here, and click. Boom. It's like, if you happen to like Joe Biden and you happen to be a small business, you might discover Bitcoin as a solution for small businesses.
And if you did, you converted that person that day.
I'm not going to make an enemy of Joe Biden, right? Nope. I don't want to make any enemies. Like, if I make an enemy of someone with millions of followers, they're not going to click like when I post anything. They're not going to support anything I say. They may actually push back harder, right? And I'm not going to accomplish anything. So I have one simple agenda, Peter, right? I want everyone that doesn't know about Bitcoin to discover Bitcoin, and I want people that know about Bitcoin to understand it better, and I want people that invested none of their portfolio and invest 5%, and I want to invest at 5% to invest 50%, and I want to think that gold is good to realize that gold is not good and sell their gold and buy Bitcoin. And I want people that like gold to stop evangelizing gold to anybody because that undermines the cause of sound money.
Mm-hmm.
And if you're 100% invested, I want you to understand it well enough you think, well, maybe I really can take out a 3% 15-year loan and be 200% invested. Why not? And
why not?
Ultimately, do I have opinion about, do I want to opine on Facebook versus Apple versus Twitter versus crypto this versus? No. Like stay in your lane, right? There's a ration. If we come back to marketing theory, right? Basic marketing theory is stay on brand. Don't tarnish the brand. Stay on brand, right? What's basic political theory? Stay on message.
We had this exact same conversation yesterday. Interesting you should say that.
Stay on brand, stay on message. Okay, you want to utter an opinion? I'm not an expert in the history of New Hampshire property taxes. I'm not going to meddle in that, right?
Yeah.
Right? I'm going to focus on very tight things. Right? How do the regulators view Bitcoin? How do they view crypto assets? How does Bitcoin stand versus other crypto tokens? What is definition of digital property? I'm going to focus on Bitcoin and institutional adoption and individual adoption and the technology and then the education. And if anybody gives me a venue on the left or the right or in the middle or in cyberspace to communicate something positive and cheerful and constructive, then I'm going to take that opportunity.
Wow. That speaks to me a lot. I'll be processing that, especially on the brand stuff. I mean, look, we've basically hardly touched any of my questions here, by the way. If we did a completely different interview, I'm just going to have to pester you for another one at some point.
Thanks for...
I'm conscious I've taken up a lot of your time here. This was brilliant. There's a lot to think about here. I don't often listen back to my interviews. There's a few bits I need to ponder on this one.
Yeah, if you want to come back and do a round two, I'm fine with it. We only covered a small portion of the things we could have covered.
Yeah, it was brilliant though, and I appreciate your time. Appreciate your hospitality here to do it. And I mean, of course, I'll come back. I'd come back all the time and do this because there's a lot more questions I want to ask. But thank you for everything again, and keep doing your thing. And there's a couple of things that spoke to me, and I think Danny's going to have a chat with me in the text on the way back and say, "I told you."
Yeah, well, it's really extraordinary time in the history of the business. If you really start to embrace the idea that this is digital energy, this is the greatest digital transformation of all the digital transformations of the last 100 years. And you're doing a great job, incredibly hardworking, making the rounds to create all the content and put on the record all of the people and all the expertise you have, and I appreciate it. It really is just testament to how much reporting there is to be done here.
Yeah.
And everybody will benefit from it. I think you got good focus, so keep up the good work.
Thanks, man. All right, appreciate it.
Thanks for making me part of the journey.
Yeah, thanks.